Hello, welcome everyone. Good morning, good afternoon, good evening, wherever you're from. Most of you are from California, but many of you are from all over the country as our member of our organization. This is Seewing Yee from the Yee Real Estate Network, and welcome to another great podcast. And this time, you're in for a very big surprise. And yet this short podcast will be the blueprint of your real estate financial future. Okay, this is not exaggeration. And who is the best person to talk about this than Mr. Richard Advani, my guest host of this podcast, because he is a mortgage loan expert. I mean, and he has done thousands of investment loans for investors all over the country for more than a decade. So he understands each specific market. He understands that real estate investment strategies. He's one of the top investment loan agents in the country, if not the top. Anyway, and also he is a real estate investor. Who has purchased multiple properties all over the country. And so, yeah, he's very well versed, not as an investment loan agent, but as a real estate investor, as an entrepreneur, as a great source of knowledge. He understands it's his job to understand the mortgage market and what have you. So without further ado, let's get started. All right. So welcome, Richard.
Thank you.
Yeah, thank you for your time. You are a very busy man. You are doing loans. You and your staff has done an amazing job servicing, doing loans for investors every single minute of the day. Very, very busy. So good for you. All right, let me share my screen and let's get it started. All right, the topic today is real estate investors out there. This is the most important financial concept you will need to know, whether you are a veteran investor, whether you are a very experienced investor, does not matter how many properties you own. And also for newbie, inexperienced investors, really pay attention. All right, so here we go. Our 30-year fixed rate mortgage, in my estimation, is the eighth wonder of the world. Now, how would I get this term? You guys know Albert Einstein, right? And he described the magic of compound interest as the eighth wonder of the world. Well, me, Seewing Yee, will slightly change it around. Your 30-year fixed rate mortgage, it is based on my definition, is the eighth wonder of the world. Furthermore, it is this 30-year fixed rate mortgage is the greatest invention in the history of real estate wealth building. Is the greatest invention since apple pie, sliced cheese. If you as an investor use it properly, it will change the trajectory of your financial future. Furthermore, it is an inflation-induced debt destruction. And finally, get into this quote unquote good debt multiple times over, you and your family's financial legacy will change forever, generationally. So without further ado, it's my pleasure to have Mr. Richard Advani to go over each of those talking points. He has some very powerful comments as well, and pay attention everyone, because this presentation will really is a blueprint for your real estate financial future. So without further ado, Richard, go for it.
Yeah, absolutely. Obviously, I'm a little partial to this one since I'm in the business and the beneficiary of the eighth wonder of the world. But I mean, I think people who live outside of the United States really truly appreciate what this is a lot more than us. You know, anything we deal with in our lives on the daily basis, we take for granted. Yep. And the 30-year fix does not exist in other countries, because think of the person loaning the money, right? I mean, if you're giving someone a loan at 5.5% or even 6%, and the inflation rate's higher than that, right? in the long term, over 20 or 30 years, it's how do you make money? And, I'm sure most of the people, institutions, the government loaning money hopes that you're not going to keep the loan for 30 years, which, historically, a lot of people don't, on primary homes at least, because obviously you're moving and you're upgrading and whatnot. But for rental property, that 30-year fix is, like you said, such a huge wealth builder. It's a good hedge against inflation, which to me is the biggest thing, right? I mean, even if you look back historically, prior to the last year or two, where inflation's nuts, double-digit inflation. They said that the average inflation rate, I think, was 2.5 or 3%, right? So, you got to keep in mind, on over the course of 10 or 15 or 20 years, right? What is 2.5% times 20? That's 50%, right? So over the course of, even at nominal healthy inflation, that's what they call, 1.5 to 2.5%, even at healthy inflation, the value or the cost for a loaf of bread, or the cost of rent, or the cost of anything, just based on pure inflation, is going to be, 15 years later, 20 years later, is going to be 30% higher, 40% higher. And, if you get a 30-year fix for an investment property, guess what's not going to change, right? Your principal and interest payment. And that's why it's such a mind blower. And that's why, Seewing, of course, understandably calls it the eighth wonder of the world. And it's not something new, and it's not some big secret. The problem is, when we talk about a 30-year fix, what does that mean, right? It means that your wealth is going to be built over time. And the longer you spend in that mortgage, with that particular property, the more wealth you're going to build. And, it's not, like I said, it's not some big secret that this exists. And that is the true wealth builder. A lot of people, especially this generation, are trying to chase returns, and get rich quick. And, I'm not saying you can't do it with real estate, but that's not how most of us have built our real estate wealth. Most of us have built our real estate wealth by strategic properties, in good markets, and holding them long term. And of course, none of that would really matter if it wasn't for, that 30-year fixed. And even with higher interest rates, a lot of people are still take it for granted, right? You tell someone, hey, you can do a 30-year fixed. And I can tell you from experience, we work with a lot of foreign national clients. And you tell them 8.5% on a 30-year fix, and they're doing backflips out of joy, because they're like, 30-year fixed, set aside the rate. With inflation, it doesn't matter, so set that aside. And also, we're looking long term. The fact that, and they're putting 40% down, right? The fact that we can get, a loan with 40% down and get a fixed rate for 30 years, we're in, we're all in. Now, of course, us here in California could put 20% down and get a rate in the fives. Yet we've been spoiled, obviously, a little bit with where, rates have been the last decade, really. The last 2 years has been, look, we were getting primary home rates in the mid twos. It's insanity, right? That couldn't keep up forever. And even before that, we were at historic lows, getting primary home rates in the high threes, which, today primary home rates are in the low fives. But, overall, the attractiveness of that 30-year fix is still here, even though rates are a little higher. And, as stated, that is the wealth builder. And, once you own a property for a decade, you're almost paying 50% split between principal and interest. You're building so much back-end wealth. You may not see it until you're ready to cash out and retire, right? But I'm looking at some of the properties I've owned for over a decade, and it's immense when you've got 15, 20, 25 properties. And now, instead of paying 180 a month in principal, you're 10 years in, you're paying 400, 500 a month in principal. Well, do the math. You're building 8 to 10 grand a month in equity between your portfolio, doing nothing. And that's not even talking about front end cash flow. So yes, regardless of, I'm talking to you right now as an investor, not as the beneficiary of this conversation, as a person that does mortgages, but as an investor, that 30-year fix is the whole key. Real estate would not be what real estate is without that 30-year fixed, the ability to hedge against inflation, and the ability to leverage, right? The fact that you can buy $1 million asset for 200,000 for 20% down, or $200,000 asset for 40% down. You could take part in the growth of that asset, but with putting minimal amount of money out of pocket. So sorry, that was a long-winded answer, but
Yeah.
you didn't have the PowerPoint up there to go through the points, so I just thought I'd wing it.
No, PowerPoint is not necessary. It's most important is the words that come out of your mouth in a very spontaneous way. That's the best way to present, right? So you're being yourself, you're being natural, you're being passionate about what you're saying because you live it. This is your business, this is your mortgage business. You need to know this, but you're talking from an aspect of a real estate investor, which all of us are. So another few terminology that applies for a 30-year fixed rate mortgage is the power of OPM, other people's money. You make the bank lend you the money because you have good credit, and then the power of leverage. The power of leverage is very, very powerful with this 30-year fixed rate mortgage. And furthermore, doing the when I know we all want lower rate, right? As an investor, we're getting maybe right now 6%, interest rate as an investor, but don't let that scare you. We love lower rates and what have you, but the reality, it is what it is right now. And but if you want to, let's listen. Okay, over time, let's say some investors they have a unrealistic expectation. They want a very, very high cash flow. They want to buy a new construction single family home, which by you and I agree, single family home is the best type of investment because this is my business model for years. I've been doing this for almost 20 years, you as well. Single family home and then up to 4 unit. Single family home, duplex, triplex, and fourplex, you get the benefits of a Fannie Mae lending guideline on top of that. So if you are, I hate to steal your thunder a little bit, Richard, but if a joint income, both spouses have a regular income, they qualify for investment loans. Imagine, as a real estate investor, you can get the maximum 10 loan limit under the Fannie Mae lending guideline. One spouse, the other spouse can do another 10 finance mortgages with the Fannie Mae lending guideline using a 30-year fixed rate mortgage, if you qualify financially, of course. I know we're talking theory, but it's powerful. On top of that, now, Richard, can you go over like some of my investors, we all want high cash flow, but because of a skyrocketing appreciation, and then you have the secondary rocketing of rents. This two thing is coming together, but still relatively lower cash flow now than before. Let me give you an example. If our investor buy new construction, which is best way to do it, you buy new construction, single family home, cookie cutter, like $250,000 to $350,000, and you can get a $2,000 or $2,400 monthly rent at a 6% interest rate. You put 25% down payment. You get a break even or slight positive cash flow at the beginning, the first year projection, but you have to think long term, something Richard and I have been educating our investors from our previous video. So Richard, can you go over, even if an investor buy an investment property today at 25% down payment, at break even or slight positive cash flow, walk from a high level, Richard, and you're good in numbers, that's your job. Over time, you get having the first 30-year fixed rate mortgage on your investment property, fixed mortgage. What's happening to the rental rates? What's happening to the equity growth? And what's happening to the principal pay down? Discuss that over time between now and 5 years from now and 10 years from now. What are the graph? What are the numerous multiple way you can talk about?
Yeah, I mean, so obviously one thing that we haven't talked about besides inflation in general is rent inflation. Typically as we've seen home prices going up, keep in mind most long-term leases are signed between 1 and 2 years. So it's going to take a while for those leases to expire. The owners of those properties, a lot of us, are going to increase rents, obviously, to coincide with those increased prices and the demand. And that's called rent inflation, and that's going to take a little while to catch up. But it's already starting to now, right? Because prices have been going up for a couple of years now. I'm sure if any of you, by the time you're watching this, or even today when we're filming it, if you just go ahead and Google, national rent prices, you will see that rent prices are up nationally dramatically, some places north of even 20%. So, once you're obviously, a decade in on a rental property, there's a couple things happening, right? One is, of course, as Seewing mentioned, OPM, and they're not opium, right? But OPM, other people's money. So, people are going to be paying you rent, which is going to pay your mortgage payment. And, you're going to note that you're going to have a lot of rent inflation happen over the course of those 10 years. So, your rents are typically going to go up over a decade-long period. In addition to that, your principal pay down is going to be dramatically accelerated on that. And, lastly, keep in mind, as we discussed often, real estate rental income for most of us with depreciation, the ability to depreciate the property is really tax-free income, and that alone is worth, I don't know what your guys' tax brackets are, but most of us are 30 to 50% plus, so if you're looking at a property, you're making $200 a month, well, you're really making $300 a month because you're mitigating taxes that you would have to pay on that, with depreciation. So, even more of a reason to, once again, hold real estate long-term. Look at it as a wealth building vehicle versus a, hey, let's make this ROI and make lots of money and get rich quick with it. Once again, as I always say, I'm not saying it's not possible, but, at the end of the day, even if if I told you I can make you a 12% return on a $100,000 investment, what would you be interested in? Most of you would probably do backflips. Now, once you realize that a 12% return on a $100,000 investment is a little over $100 a month, it changes, right? Now, congratulations, you got a 10% investment ROI on your investment, but what is that $100 going to do for you? Do you need it to pay your bills? Is that going to pay for a dinner, maybe half a dinner? And the reason why that's important to share is it kind of takes the emphasis of everyone's brain off of just chasing an ROI. It's more important of, what is that ROI going to do for you? When is it going to do it for you, right? When do you want to cash out? When is that cash flow important to you? If you're still working and retirement's far off in the future, then I'm not concerned with today's ROI. I'm concerned with the ROI in 20 years when I want to retire. I'm concerned with the value of the asset in 20 years when I want to retire. So, hopefully I hit the point you were looking for, but it's once again, it's that same tune, right? Eighth wonder of the world. The time that you're really going to be able to leverage that and take advantage of that wonder is, being in your property and being in that loan for the longer term.
Oh, absolutely. I totally agree with you. Foreigners that they are jealous of us in America. We have this power of this 30-year fixed rate mortgage. So don't take it for granted, because if you have good credit, you have the money. Wow, what a time to buy. Like I said, 20 to 25% down payment to buy a new construction single family home up to a fourplex in the south and southeast market. I'm sure, Richard agree with me, is the best place to buy, where you can cash flow 20 to 25% down payment. Like I said, break even or slight monthly cash flow, that's fine. Like Richard said, $300 or $400 monthly cash flow at the end of the month is not going to break the bank. It's not going to hurt you, because a lot of our investors, Richard, they're making $200,000 to $300,000 annual salary who are buying investment property. You're making like $20,000 to $25,000 monthly income from your check, from your paycheck. Even if you buy a property a slight negative cash flow, $100 or $200, it's not going to make a difference. Like Richard said, I mean, a price of a dinner out for a person of two in a decent restaurant will cost you $300 or $400, just like that, one dinner. Or anyway, you know, inflation and all that. So long term is powerful. You know, your renter, your tenant, as you know, Richard. I mean, because of a affordability issue over the country with the rising housing prices, there will be more and more renters out there. They could be bidding to live at your home, the investment property you're buying, the single family home. I mean, they are fighting tooth and nail. They are like, for every investment homes available for rent, there are like 30 to 40 rental applications or more, depending on what market. We talk about Florida, Texas, North Carolina, Georgia, and you know, throughout the throughout those good markets area. So let's recap again. Let's take a look at the summary as we conclude this presentation. Yeah. So I'm sure, Richard, you and I have done a lot of real estate podcasts in the past few years, and we all feel it is a very educational. But this, I truly feel, I'm sure you agree, this particular presentation is just, it has to resonate, right? I mean, this is so important for you to know. So let's recap, right? So now you see on the screen, the last 2 minutes we have. So the eighth wonder of the world, definitely, it's the greatest invention in history of wealth building. You know, you take action, you buy multiple properties with 30-year fixed rate mortgages. You know, you do it consistently, you do it over time. Understand this is a good debt, you know, it's not like bad debt, nothing like that. And look in the future, and you can achieve financial freedom at some point in time in the future for yourself, your family, your loved ones, your children, grandchildren. Is a generational. Imagine you can pass on your financial legacy for generations to come. I mean, every family wants that. Everybody wants to have American dream. But you as a real estate investor, if you understand this concept, if you leverage your debt in a good way, buy, invest, you know, income producing real estate properties, long-term over time, you're going to be much more off than you are right now. So it's all about taking action. So with that in mind, Richard, what is your own recap what we just discussed so far before we go?
Absolutely. Yeah. I mean, that, you know, now is as good a time as any to buy real estate. It's always a good time to buy real estate if you're buying property on the right fundamentals and looking long term. And then lastly, you know, if you look at any of the articles and, you know, what some of the economists are saying, regardless of rates, there's a major supply and demand issue, and that is not getting resolved anytime soon. So, you know, I guess general climate in the economy right now is that real estate is going to remain robust, you know, at least for the next 3 to 5 years. So does that mean it's going to keep going up 20% a year? You know, probably not, maybe, but probably not. But it means it's not going to do this. You know, supply and demand means it's still going to keep moving up, still going to be a good, secure investment. And what are you waiting for?
Right. Yep. That sums it up, Richard. So well said. And we're very proud to have done this presentation. It's so important, more important than any other presentation we have done. I'm sure Richard, you'll agree. So I just want to take a step back and just provide value for real estate investors out there. So all I have to do is take action. Just when, you know, what Nike said, just do it. Just do it, right? Yeah. Well, thank you so much for watching, everyone. Have a nice day. My name is Seewing Yee from the Yee Real Estate Network, and Richard Advani from Supreme Lending. Have a nice day. Goodbye.